Now we'll solve question number 7. Share capital, equity share capital 6 lakh has become 8 lakh in current year. So issue of shares, it comes under financing activity. There is 2 lakh cash inflow. So financing activity, issue of shares. 2 lakh. So it is cash inflow. And next, preference share capital redemption 1 lakh cash outflow. Negative balance 1 lakh. Reserve 80,000 has become 1,40,000. So 60,000 is transferred in current year, comes under operating activity. So first we'll take net profit. Net profit is 36,000. 96,000 minus 60,000. Net profit 96,000 minus 60,000. So 36,000 is net profit. Okay, this to this net profit, amount transfer to reserve should be added. Add transfer to general reserve. Amount transferred to general reserve is 60,000. That is 1,40,000 minus 80,000, 60,000. Next, proposed dividend. Proposed dividend, current year dividend should be added here. Add proposed dividend this is 1,40,000 minus 80,000. So proposed dividend, current year dividend is 1 lakh rupees. Okay, this 84,000 is previous year dividend, will be paid in current year. So there is outflow of 84,000. It comes under financing activity. Financing activity, dividend paid. $84,000. This is outflow, should be written in minus balance. Next, proposed dividend is over. Next, creditors 1,10,000 has become 1,66,000. So 1,66,000 minus 1,10,000. So 56,000. There is increase of creditor to the extent of 56,000. Increase in liability should be added. Creditor increased by 56,000. Next, bills payable. Reduction of bills payable to the extent of 8,000. Current liability reduced, should be deducted. Bills payable decreased by 8,000 in current year. Next, provision for tax. Opening balance 80,000, closing balance 1 lakh. Provision for tax. Opening balance, liability will have credit balance, should be brought down on credit side by balance brought down. Opening balance is 80,000. Closing balance, to balance carried down. To balance carried down 1 lakh. Okay, we have taken opening and closing balance. Next, asset side, goodwill 2,30,000 has become 1,80,000. So written off of goodwill 2,30,000 minus 1,80,000. So it is 50,000. 50,000 goodwill written off. It is non-cash expenses. Comes under operating activity. Add non-cash, non-operating expenses. Goodwill written off to the extent of 50,000. Okay, next, land and building. There is adjustment and we have prepared land and building account. Land and building asset will have debit balance. Land and building opening balance 4 lakh. As asset will have debit balance, opening balance should be brought down on debit side to balance brought down, opening balance 4 lakh. Closing balance by balance carried down. Closing balance 3,40,000. 3,40,000. Next, plant. As there is depreciation, there is adjustment in plant and machinery, so we need to prepare plant account. So opening balance of plant is 1,60,000, brought down on debit side opening balance to balance brought down, opening balance 1,60,000, closing balance by balance carried down, closing balance amount is 4 lakh. Next, stock. Current asset increased 2,18,000 minus 1,54,000. 64,000 worth of current asset increased. If current asset increased, it should be deducted in operating activity. Stock. Increase in current asset. Stock increased by 64,000. Next, debtor also increased. 3,20,000 has become 4 lakh. Increase in debtor to the extent of 80,000. Next, bills recoverable or receivable increased to the extent of 20,000. Bills receivable BR increased to the extent of 20,000. Next, cash in hand opening balance. Opening balance of cash and cash equivalent. So after ABC, we'll get net increase or decrease in cash. To this, we need to add opening balance of cash. Opening balance of cash is 30,000. Opening balance of bank is 20,000. Cash at bank 20,000. Opening balance of cash and cash equivalent is 50,000. Opening balance of cash and cash equivalent is 50,000. We need to add this 50,000 to net increase or decrease in cash and cash equivalent. Opening balance is taken. Closing balance of cash and cash equivalent is 20 plus 16, 36,000. Closing balance of cash and cash equivalent is 36,000. So 36,000 will be the final answer. So how come this 36,000? Cash in hand 20,000 and cash at bank, 16,000. Total 36,000. We have finished balance sheet. Next, we'll do adjustments one by one. First adjustment, depreciation 20,000 on plant and machinery. So adjustment should be written on two sides. Number one, depreciation is non-cash expenses. Add depreciation, non-cash expenses. Depreciation on plant 20,000. Non-cash expenses is added in operating activity. Number 2, depreciation journal entry, depreciation account debit, plant and machinery credit. Plant and machinery credit side. By depreciation amount 20,000. Debit and credit aspect is finished. Depreciation should be shown on credit side of plant and machinery account. Again I repeat this adjustment. Depreciation 20,000 on plant is given. So depreciation is non-cash expenses, should be added to operating activity. Depreciation on plant 20,000. Number 2, depreciation should be shown on credit side of that ledger account. Depreciation 20,000. 1,60,000 minus 20. So net asset balance will be 1,40,000, like that. And second depreciation is given. 40,000 depreciation on land and building. Again depreciation is non-cash expenses, should be added here. Depreciation on land and building 40,000. Number 2, depreciation should be shown on credit side of land and building. By depreciation 40,000. Okay, first adjustment is finished. Go to second adjustment, interim dividend 40,000 paid. Dividend paid should be added to net profit to calculate profit before tax. Add interim dividend. Interim dividend paid 40,000. Number 2, dividend paid is financing activity. It comes under financing activity. So in financing activity 40,000 is shown as outflow. Financing activity, interim dividend paid. Outflow 40,000. Interim dividend paid, outflow 40,000. Second adjustment is finished. Go to third adjustment, income tax paid. Income tax paid comes under provision for tax, ledger account, journal entry for income tax paid, income tax account debit, cash account credit. Okay, provision for tax debit to cash or bank. 70,000 is tax paid. Tax paid during the year 70,000. Number 1. Number 2, it should be deducted in operating cash flow. So income tax paid should be deducted here. So this is a operating activity. At last we'll get cash flow from operating activity. To this balance income tax should be deducted. So income tax paid during the year is 70,000. So deduct 70,000 here. Okay, so now all the adjustments finished. Now close the ledger first, one by one. I'll close first ledger, provision for tax. Debit side is more, 1,70,000. Take same balance on credit side, 1,70,000. 1,70,000 minus 80,000, 90,000. So 90,000. So this 90,000 is by current year provision. Current year provision. Okay. Current year provision is 90,000. Okay. So provision for tax, current year provision for tax should be added to profit, net profit. Add provision for tax. Provision for tax. So current year provision 90,000. So provision for tax should be added to profit to calculate net profit before tax. So first ledger is finished. Second ledger, land and building. $3,40,000 plus 40, 3,80,000. 4 lakh. Debit side is more. 4 lakh. Take same balance on credit side, 4 lakh. So 4 lakh minus 3,80,000. So balance is 20,000. So 20,000 by bank. So this balance, if we get credit side balance on asset account, if we get credit side balance, it is sale of asset. 20,000 worth asset is sold. On the otherwise, if we get debit side balance, it is purchase of asset. So 20,000 worth asset is sold. It is cash inflow. So cash inflow, land and building comes under investing activity. It is cash inflow of 20,000. Investing activity. B, cash from investing activity. Sale of land. Sale of land. So amount 20,000. Cash inflow, positive balance 20,000. Now I'll close last ledger account, plant and machinery. Debit side 1,60,000, credit side 4,20,000. Credit side more, 4,20,000. Same balance, take same balance on debit side, 4,20,000. 4,20,000 minus 1,60,000. 2,60,000. So we get debit side balance here. I mean credit side excess we have. So 2,60,000 worth asset is purchased to bank. So it is purchase of a asset. Outflow to the extent of 2,60,000. 2,60,000 is purchase of plant and machinery. Outflow of cash comes under investing activity. Investing activity, plant and machinery, purchase of plant. $2,60,000. Outflow of cash should be written in minus balance. All the ledgers are